Be Wealthy and Smart, episode 811.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about the 2021 outlook for SPACs and IPOs. Now, if you're not familiar with SPACs and IPOs, hang on because you'll find out what those acronyms are all about. But this article comes to us from CNBC and was written by Bob Pisani. And it says, IPOs versus SPACs, who will win in 2021? 2020 was a surprisingly good year for IPOs, that's initial public offerings, but was an even better year for special purpose acquisition companies, or SPACs. There were 194 traditional IPO deals, which raised $67 billion, the best year since 2014, according to Renaissance Capital. But it was an even better year for SPACs, which raised just about the same amount. 200 SPACs raised about $64 billion. SPACs are companies with no commercial operations that are established solely to raise capital from investors for the purpose of acquiring one or more operating businesses. They were a small part of the investing landscape until a couple of years ago, but their popularity has exploded in the last couple of years. Who's going to win in 2021? Market participants say there's room for both. If you combine IPO and SPAC volume of $130 billion, these numbers exceed anything we have seen since the internet bubble, Kathleen Smith from Renaissance Capital, which provides IPO research to investors, told Bob Pisani. Smith's ETF, the Renaissance Capital IPO ETF, symbol IPO, is a basket of 50 of the largest companies that have gone public over the last several years and has been a big beneficiary of the interest in IPOs this year. After years of relative underperformance, the IPO ETF is up 100% this year and recently hit historic highs. Assets under management now exceed $500 million. Returns have been boosted by pandemic-driven demand for digital economy, e.g. Zoom and Pinterest, and biotech like Moderna, stocks that are typically constituents of the IPO market. But SPACs are on a roll as well, and undeterred by prior criticisms about SPACs in general. SPACs bring many advantages to the capital raising process. Gil Ottensasser, head of SPAC banking and capital markets at ETIG, told Bob, including full transparency. SPACs must file an S-4 when announcing a company they are seeking to buy that contains much of the same disclosure and risk outlines that is in the S-1 that an IPO must file. Also, sponsors with expertise. Bill Ackman, Michael Klein, Chamath Palihapitiya, and private equity firms like Apollo Global, Solamere Capital, TPG Capital have all come into the space recently, lending credibility to the SPAC enterprise. Next, ability to use forward-looking guidance. Because the SPAC is a public company, when it announces the company it is buying, the SPAC is able to provide forward-looking guidance on the company. Investors get to see even more information about the target company than they would have in an IPO, Ottensasser told Bob. And finally, an easy exit. Investors unhappy with the target acquisition can get out by selling their shares before the acquisition is finalized. So who will win in 2021? IPOs and SPACs are both subject to the same rules of the game when going public. Much of it depends on market conditions. An up market and an improving economy will be helpful to both camps. Smith says there will be plenty of big-name unicorns that will likely use the IPO route to go public in 2021, including SpaceX, which is space vehicles, Stripe, which is mobile payments, Waymo, which is Alphabet's autonomous vehicle, and Instacart, which is grocery delivery. Her IPO ETF will be one of the first ETFs to include Airbnb and DoorDash when they go public this week. Paul Dell'Aquila, who runs the Defiance Next Generation SPAC ETF, symbol SPAK, a basket of recent SPAC offerings, expects the profile of SPACs to only increase in 2021 now that it has so many big names behind it. Nothing succeeds like success, Dell'Aquila told Bob. Up until a couple of years ago, most SPACs were small-cap affairs with low profiles. Then, companies like Virgin Galactic and DraftKings went public via SPACs, which greatly lifted the profile. Both are among SPACs, SPAK's biggest holdings. Next up, says Dell'Aquila, sports teams. He says Redbird Capital, Billy Beane of Moneyball is an investor, is seeking to take a sports team public, perhaps Fenway Sports Group. Even staunch IPO proponents like Kathleen Smith says there is room for both IPOs and SPACs. She notes the SPAC offerings keep many money-losing stocks out of the regular IPO market, making it a better quality structure. Assuming the markets hold up and the economy improves, the sheer number of SPACs currently seeking acquisitions, 210 according to BTIG, all with time limits of 18 to 24 months maximum, implies that 2021 will be at least as strong as 2020. End of article. Well, that's very interesting. It points out that one of the weaknesses of companies that are going public with SPACs is that many of those companies are money-losing stocks, so they're not yet making a profit. Therefore, be cautious because some of those may not make a profit for many years into the future, and yet owners of the shares are unloading them onto the public markets, making their profits and getting out without even having the company make $1 of profit. So be cautious. These are definitely higher risk, and even though they've been extremely successful this year, this has been an unusual year with all the money printing and stimulus that we've had. So markets are very frothy, and that's just when these things do extremely well. Should markets turn downward, these would be expected to be some of the hardest hit, I would believe. So definitely don't overload your portfolio with them, use diversification, and don't expect the same performance next year necessarily. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And it's time for our holiday giveaway. So if you haven't left a review yet, this is your opportunity to perhaps win something in a drawing. And you'll have the opportunity to win one of 20 prizes I'm giving away. 10 of my Wealth Heiress books, which was named to the list of all-time best wealth books by Book Authority, and men love the book too. And 10 of my Wealthy Mindset Blueprint audio sets valued at $197. All you need to do is leave a podcast review on iTunes, and you'll be entered into the drawing one time. And if you've read the Wealth Heiress book and leave a book review on Amazon, you'll be entered into the drawing 2 times. And winners will be announced on the January 13th podcast. So I'd love to hear from you. Tell me what you think of the podcast and give it a rating. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.